And as you're sitting down, and for those online, welcome back from your break. Oh, I guess we'll get to that in a second anyway. Morning, I'm Lisa Calandrillo. I'm an Associate Chief Auditor in our Office of the Chief Auditor. I have been with the PCAOB for nearly 15 years now. I've worked on projects that included Form AP, auditor's use of specialists, and one of your all-time favorites that Tony talked about this morning, non-compliance with laws and regulations. And I also assist in other functions of OCA, including things like reviewing documents from our Division of Registration and Inspection and our Division of Enforcement. Andrew?
And I'm Andrew Cleve. I also work in the Office of the Chief Auditor. I've been with the PCAOB for about 3.5 years. I'm an Assistant Chief Auditor. And I worked on various projects. One that actually has gone effective this year is the Other Auditors Amendments, so what DRI was talking about just in the last session. And then some other projects that are currently on the agenda, including going concern and internal audit.
So I would be remiss if I didn't start with the standard disclaimer that you will all know by heart by the time you leave here today. This presentation is provided in our official capacity as PCAOB staff members, but the views expressed are ours and do not necessarily reflect the views of the board members, or other members of PCAOB staff. Quickly want to go over our agenda for today. Our presentation today will include a brief overview of the board's current standard setting agenda, including recently issued proposals. We'll also discuss 3 standard setting projects that were adopted by the board this year. These include the amendments related to aspects of designing and performing audit procedures that involve technology-assisted analysis of information in electronic form, which I'll refer to as the technology amendments. AS 1000, which addresses the general responsibilities of the auditor in conducting an audit, and QC 1000, our new quality control standard. We'll also do a deeper dive into the confirmation standard, which was adopted in 2023 and is becoming effective now. We'll go into more of that later. Before we get into the details, though, we thought it'd be helpful to walk you through where you can find standards-related activities on our website. The board has many projects underway, as you heard this morning, some from Tony. And the PCAOB website is the best source of the latest information on all of these activities. On this slide, you can see a screenshot of the standard setting activities on our standards webpage. To get to this menu from the home screen, you go to Oversight, then you click on Standards. All of the standards-related projects the PCAOB is currently working on can be found by clicking on the Standard Setting, Research, and Rulemaking Projects tab. That's the one identified on the screen here with the arrow. This is also the place for you to go if you want to find where you can comment on PCAOB proposals. It's important that the PCAOB standards can be used by smaller firms, so we definitely encourage you to take note of our rulemaking process and where you can leave comments. The standard setting agenda is made up of several components, and this slide presents a simplified version of those components. The first category is our recently issued proposals, and the second is our recently completed proposals. This is really the material that we'll be focusing our attention on today. As for the rest of the categories, the short-term projects are where there's board action expected in the next 12 months. Aside from the proposals that we'll go over shortly, this category currently includes projects to update standards on going concern, auditing inventory, and other reporting circumstances. The midterm category is where the staff is actively working on a project, but board action is not expected in the next 12 months. This currently includes projects to update several interim standards, including those on internal audit, use of service organizations, and fraud. Then there's ongoing research projects. These include research on the use of data and technology and communication on CAMs. And finally, the rulemaking projects. These are projects that deal with various PCAOB rules and are typically led by our Office of General Counsel. One of these projects has been completed and 2 have been issued for comment. The bottom of the slide is an example of how each project appears for each category. It's important to note that the standard setting agenda is dynamic and is updated as needed based on circumstances. At a minimum, it's updated semi-annually, but some of you may have noticed that there was an update released 2 days ago. So if you don't subscribe to our alerts, I would encourage you to do that so you can know when we've updated our standard setting agenda. So with that background, I'll turn it over to Andrew to provide you a high level of the board's outstanding proposals.
Thank you, Lisa. The 2 proposals at the bottom of the slide are part of the rulemaking projects Lisa mentioned, and they deal with various aspects of a firm's interaction with the PCAOB. We won't be covering these today. The 3 in the top row are standard setting projects led by the Office of the Chief Auditor. The first project is on designing and performing substantive analytical procedures. In June, the board proposed to replace the existing standard on substantive analytical procedures, AS 2305, which was put in place by the AICPA in 1989 and adopted by the PCAOB in 2003 as part of the interim standards. The existing standard predates advancements in technology and greater availability of information that we understand are influencing current practice. The proposed standard would strengthen and clarify the auditor's responsibilities for performing substantive analytical procedures and address risks specifically associated with the use of technology-assisted analysis in substantive analytical procedures. We'll only touch briefly on the proposal for firm and engagement metrics. As you may have seen last week, we announced an open meeting for tomorrow, November 21st, for the board to consider adoptions related to this, as well as the firm reporting project. With respect to the registration-related rulemaking, one of our general counsel's other active rulemaking projects, last week the board adopted changes to its rules to enhance the usefulness of audit firm registration information. The Firm and Engagement Metrics project stems from the recommendations of Treasury's Advisory Committee on the auditing profession back in the late 2000s. In 2015, the board issued a concept release for audit quality indicators. In the time since, the PCAOB analyzed comments on the concept release, reviewed voluntary disclosures by some firms, and considered recommendations from the board's investor advisory group. This work resulted in a proposal issued earlier this year under which some registered firms would publicly report certain information about their business at the firm level and at the engagement level. The reason for the proposed reporting is to provide additional information about firms that audit larger companies to interested parties, such as investors, audit committees, and others, including auditors like you. Examples of the proposed metrics include relative workload of partners and staff, like ours, use of auditors, specialists, and shared service centers, industry experience of partner in years, overall staff experience also in years, retention and tenure. There are 11 different metrics overall. Not all firms would be required to report these metrics, and not for every audit, although anyone could choose to comply voluntarily. Under the proposal, firm-level reporting would be required for every firm that during the reporting period audits at least one accelerated filer or large accelerated filer, as those terms are defined by the SEC. Engagement level reporting would be required for every audit of an accelerated or large accelerated filer and would be reported by the PCAOB on a revised Form AP. The proposal was issued in April, and tomorrow the board will be considering an adoption. Lastly, as Tony noted earlier in 2023, the board issued a proposal to replace AS 2405, Illegal Acts by Clients, with a new standard that would enhance the auditor's responsibilities to plan and perform procedures related to identifying and evaluating a company's non-compliance with laws and regulations. The proposal was issued last year and received a significant amount of comment. Earlier this year, the staff hosted a public roundtable to discuss certain aspects of the proposal and related comments received. We continue to analyze the comment letters and feedback received from the roundtable. The comment period for each proposal has closed, and the comment letters are being analyzed by the staff. And then also last week, the staff issued a spotlight on auditor responsibilities for detecting, evaluating, and making communications about illegal acts, which you can find it on the staff publications page under resources on the public website. In light of the staff guidance, as Tony discussed earlier, the standard setting agenda was recently updated to indicate that the PCAOB will not take additional formal action on NOCLAR this year. We plan to continue engaging with stakeholders, including the SEC, as we determine potential next steps. Now I'd like to turn from our ongoing rulemaking projects to the recently adopted standards and amendments. Before I do, are there any questions about what we've covered so far?
I'm not seeing anything in the social Q&A. Remember, you can use that if you do have questions. So Andrew, keep going.
Yep. Before we move forward, we've got our first check-in code word, which is 197. 197.
It's going to start sounding like we're calling
bingo
numbers here.
Yeah.
Anybody have 197? Okay.
197 again, 197. So for the recently completed projects, there are 4 we're going to touch on that are listed on the slide. All very different, but all have the same goal: to modernize the board's interim standards to improve the quality of audits and better protect investors. We're going to start with the technology amendments. And these are all, I'll just mention again, they're all included under the recently completed projects on the standards page.
Thanks, Andrew. The technology amendments were adopted on June 12th and approved by the SEC on August 20th. They address certain aspects of designing and performing audit procedures that involve technology-assisted analysis, which has enabled auditors to obtain and analyze more information in different ways and identify more items for further investigation. The amendments that are part of this project are focused on technology-assisted analysis, commonly referred to as data analytics. They do not address specific matters related to other technology applications, such as artificial intelligence. I'll start by describing the amendments to AS 1105. First, the amendments provide that if the auditor uses an audit procedure for more than one purpose, the auditor should achieve each objective of the procedure. That is, achieve all purposes of doing that procedure. Next, the amendments address auditor responsibilities when evaluating the reliability of external information provided by the company in electronic form, which has become more prevalent. The amendments also emphasize the importance of controls over information technology for the reliability of audit evidence, as auditors obtain and use large volumes of information in electronic form provided by the company. Lastly, amendments emphasize the relevance of audit evidence depends on the level of disaggregation or detail of information necessary to achieve the objective of the audit procedure. With respect to AS 2301, the amendments included a new section that describes tests of details and specifies the auditor's responsibilities when investigating items identified in a test of details. Under the new provisions, when performing a test of details, the auditor is required to apply audit procedures that are appropriate to the particular audit objectives to each item selected for testing. The auditor may identify items that require further investigation, and the auditor's investigation of those items is part of the auditor's response to the risks of material misstatements. These technology amendments to AS 1105 and AS 2301 will take effect for audits of financial statements for fiscal years beginning on or after December 15th, 2025. I want to emphasize that. These are for fiscal years beginning on or after December 15th, 2025. Some older projects like other auditors were for fiscal years ending. So we are now using beginning. So be aware of the difference. We often forget. Before I move on, let's see, do we have any questions? No questions in the social Q&A, anything from the floor? But we do have a code. Our next code is 942. The code is 942. Please make a note. And then we will begin talking about AS 1000, some changes that will be effective for fiscal years beginning December 15th, 2024. The AS 1000 project got its name from a group of standards that are being combined into one new standard, AS 1000, General Responsibilities of the Auditor in Conducting an Audit. As you can see on the screen, the project also includes amendments to other standards from the PCAOB. With all of these updates have in common is that they address some fundamental responsibilities of the auditor in general and engagement partner in particular. Although, except for the documentation requirement, they don't change existing requirements. We still think it's important to discuss the updates with you so that you can better navigate the new simplified framework. Let's look at them one by one. First, we combined several standards into AS 1000. In the interim standards issued by the AICPA, things like responsibilities and functions of the auditor, independence, training and proficiency, and due professional care were discussed in separate standards addressed in the so-called 1000 series under the PCAOB's reorganization of auditing standards. Now, they're all in one place, new AS 1000. But in addition to combining the requirements, the new standard updated them to better align with new standards issued by the PCAOB. These updates included, for example, referring to financial reporting framework instead of GAAP, referring to PCAOB independence rules, referring to sufficient appropriate audit evidence and not competency and sufficiency of evidence, using the terms should and must, which are defined in PCAOB Rule 3101, and referring to audits of ICFR, Internal Control Over Financial Reporting. Like I said, the new standard does not create any new principles, but it provides a more logical presentation, basically making the standards easier to read, understand, and apply. Next, we folded the present fairly requirements from 2815 into AS 2810. This next set of amendments mentioned on the slide rescinds a standard, that's 2815, that discusses the auditor's evaluation of whether the financial statements are presented fairly. It folds it into the requirements another standard that deals with evaluation of audit results, AS 2810, evaluating audit results, that reduces duplication and confusion and makes the standards easier to read and understand. Next, we've emphasized engagement partner responsibilities. Without changing any existing responsibilities, the next set of amendments emphasizes certain responsibilities of the engagement partner for the supervision, including review, of the work of other engagement team members. Here are some examples. The engagement partner should review the documentation of significant findings or issues, which should be prepared under AS 1215. The engagement partner should also review the documentation that is required to be provided by the engagement quality reviewer under AS 1220. The engagement partner's review and evaluation of work performed by the engagement team members must be completed prior to the report release date. And lastly, audit documentation should clearly indicate the engagement partner's review. Next, the 14-day period until the documentation completion date. This last bullet describes a change in the existing documentation requirements and was set for implementation using a scaled approach, as Tony talked about earlier today. Under the existing requirements, AS 1215-15 says a complete and final set of audit documentation should be assembled for retention as of a date not more than 45 days after the report release date, which is known as the documentation completion date. Originally, the time limit was established in part because documentation produced contemporaneously with the audit procedures is generally of better quality than documentation added much later. Back then, many work papers were still paper-based, and allowing 45 days for completing the documentation made sense, especially in multi-location or multinational engagements. But another way to look at this duration of the documentation completion period is that a longer period may also pose a greater risk of improper alteration of audit documentation because it provides a lengthy window of opportunity to do so. But since then, we've seen in practice that new technology has made it easier to prepare and archive work papers much quicker than a month and a half. So, the AS1000 project accelerated the document completion date from 45 to 14 days. It was designed to strike a balance between investor protection and allowing sufficient time to archive documentation. The 14-day provision was included in last year's proposal, comments were analyzed, and the provision was retained in the final set of amendments the board adopted this year. But as you can see, smaller firms still have a little more time to switch to this new time frame. Here you'll see the effective dates for the requirements included in the AS1000 project that's been approved by the SEC. Except for the documentation completion date requirement, the updates will take effect for audits of fiscal years beginning on or after December 15th, 2024. So on December 16th, 2024, you'll see our website updated for the standards updated for these AS1000 changes. Immediately that day is the primary set of auditing standards. But in response to comments on the proposal, revisions were made in the adopting release to take a phased-in approach and provide smaller firms with additional time to comply with the new documentation completion date. So, here's your phased-in approach. For firms that during the calendar year ending December 31st, 2024, issued audit reports with respect to more than 100 issuers, that's generally an annually inspected firm, the 14-day documentation completion date requirement is effective for audits of financial statements for fiscal years beginning on or after December 15th, 2024. For everyone else, all other firms, the 14-day documentation completion date requirement is effective for audits of financial statements for fiscal years beginning on or after December 15th, 2025. So these firms have an extra year to comply. With that, one of the questions in here relates to the QC documents, and that's perfect timing because Andrew is going to take us through QC after you get your next code.
180. Code is 180.
We'll give you another second.
And also say the code 180 one more time. So this slide gives you a high-level overview of the QC project. We believe it is important to mention this standard today because it is a significant rulemaking, first and foremost for the auditors. The QC system is the foundation of the audit practice of every firm, and the new standard will have an effect on all firms that are registered with the PCAOB, even those that do not perform any audits. Every step of this rulemaking was informed by extensive research and outreach. The work involved, for example, reviewing PCAOB inspection and enforcement activities, discussions with PCAOB advisory groups, issuance of a concept release in 2019, and releasing a proposal for public comment in 2022. The current QC standard was adopted by the PCAOB in 2003, but it was developed by the AICPA in 1997. In the ensuing 27 years, the auditing profession has changed significantly, including that it is no longer self-regulated and firms have had to make changes to their QC systems in response to findings from PCAOB inspections. The use of technology by firms in relation to QC activities and performing engagements has evolved, and some firms' management and organizational structures have also evolved to include more focus on centralization and a globally consistent methodology. So what are some differences between the current and existing QC standards? The current PCAOB QC standards are based on the higher level principles that do not directly address these developments. The new QC 1000 is more specific. It sets forth quality objectives for the component of its QC system and also includes some specified quality responses. As you may be aware, before the PCAOB adopted QC 1000, the IAASB and ASB issued their own quality control standards, ISQM1 and SQMS1. The good news is that firms can leverage the work they have already done and the investment they have already made to comply with those other requirements. For example, these other frameworks informed the PCAOB's thinking when developing QC 1000, and so the structure of QC 1000 has commonalities with the structure of ISQM1 and SQMS1. Importantly, like the other QM standards, QC 1000 is risk-based and therefore inherently scalable. But QC 1000 also has alternative and incremental provisions that the PCAOB designed to better serve investors, the public interest for PCAOB registered firms. Here are some examples. Firm governance of the largest firms, more specific requirements for monitoring and remediation, and the evaluation of the QC system. An ethics and independence component which in QC 1000 is aligned with SEC and PCAOB requirements, more specific provisions addressing the firm's use of technology when establishing quality objectives, and there are also some externally communicated firm level and engagement level information and metrics which are separate from the proposed firm and engagement metrics project that we have discussed and are on the agenda for tomorrow. So QC 1000 makes distinction between the firms that are simply registered with the PCAOB and those that perform audits. All PCAOB registered firms, even those who do not perform audits of issuers or broker-dealers, will be required to design a QC system that complies with the new standard. According to the QC release, about half of the 1,600 firms registered with the PCAOB have not performed an engagement under PCAOB standards for an issuer or broker-dealer in the past 5 years, for context on that. The firms that perform audits of public companies or SEC-registered brokers and dealers will be required to implement and operate the QC system that they design. QC 1000 is an extensive and comprehensive standard. For more details on the history of the project, including historical documents and comments received, please see the standard setting page we looked at earlier. There are just a few other things I will mention for QC 1000, which are evaluation and reporting, scalability, and the effective date.
While we flip over to the next slide, somebody did ask us the question of, does the term issuer include or not include broker-dealers? Issuers and broker-dealers are separate. So the term issuer does not include broker-dealers or vice versa, unless the broker-dealer is in and of its own right also an issuer.
So evaluation of the QC system. The firms that implement and operate a QC system would be required to, 1, annually evaluate their QC system, and 2, report the results on a new non-public Form QC. The firm's evaluation of their QC system would be performed annually as of September 30th and reported to the PCAOB no later than November 30th. As Tony noted in his opening remarks, scalability is an important consideration in our standard setting, and QC 1000 is designed to be scalable depending on the size of the firm and its practice. In particular, there are incremental requirements for firms that issue audit reports for more than 100 issuers per year. These firms are also required to establish an external oversight function for their QC system, composed of 1 or more persons who can exercise independent judgment related to the firm's QC system. Firms that issue 5 or fewer engagement reports for issuers or broker-dealers in a year may include audits not performed under PCAOB auditing standards in some of their monitoring activities. In addition, depending on the nature and circumstances of the firm, including its size and structure, and its engagements, a single individual may be assigned more than one of the QC system oversight roles required under the standard. Next, the effective date. QC 1000 and related amendments have been approved by the SEC and will take effect on December 15th, 2025. The initial evaluation of the QC system would be performed as of September 30th, 2026, and initial reporting to the PCAOB on new Form QC by November 30th, 2026. Before we move on to our last topic today, I want to quickly point out that once adopted, each project gets an implementation page, which you can find by clicking this tab on our website. The page summary includes a summary of the new standard and amendments, but also includes any relevant implementation resources that the PCAOB puts out. For example, AS1000. As you may also have heard from the Chief Auditor in her remarks at last week's CAG meeting. Last month, the staff published some new resources to aid in the implementation of QC 1000. You can find those on the QC implementation page. The following items: a practice aid providing a high-level overview of certain features unique to QC 1000, a firm system of quality control, a comparison of QC 1000 and ISQM1 and SQMS1, and a webinar in which the PCAOB staff provide an overview of QC 1000, a firm system of quality control. Before we get into the details of AS2310, the auditor's use of confirmation, I wanted to point out two other staff resources that were recently released. As Tim noted in his remarks, the staff have begun an audit focus series to highlight key reminders for auditors from the PCAOB standards and staff guidance. The first edition of this was released last week and focuses on critical audit matters. You can find this document on the PCAOB website under resources. And the staff have also compiled a fraud risk resources for auditors, which can be found on the website under resources information for auditors. This page highlights important PCAOB and SEC resources regarding the auditor's consideration of fraud in an audit, including overview of the auditor's responsibilities under PCAOB standards, PCAOB and SEC staff guidance, PCAOB inspection spotlights, relevant PCAOB and SEC enforcement actions, and the standard setting project on fraud risk. This page is designed to highlight certain important resources, not to replace requirements of PCAOB standards. So please refer to the resources highlighted on the webpage for more detailed information on fraud risks.
And we did receive one question about QC implementation resources. The best place for you to go is to keep monitoring the QC 1000 implementation page. As new resources are released, they will be posted there. The nature of those resources is still in process. So I can't share what we have. We do have things, but we are working on other implementation resources, so stay tuned and keep an eye on those implementation pages.
And our next code is 952.
That's 952. We're making good time, so we'll leave this up for just another couple seconds. Make sure you've gotten the code. Everybody at home, I hope you got the code. We're going to move forward now.
So the last item on our agenda is a new auditing standard on confirmations. But first we have our first polling question, which is, what is the effective date for the new confirmation standard? Is it A, for audits of financial statements for fiscal years ending on or after June 15th, 2025? B, for audits of financial statements for fiscal years ending on or after December 15th, 2025? C, for audits of financial statements for fiscal years ending on or after December 15th, 2024? Or D, for audits of financial statements for fiscal years ending on or after June 15th, 2024? Give it a few more seconds. And the correct answer is A, for audits of financial statements for fiscal years ending on or after June 15th, 2025, which we'll talk about right now. So the new confirmation standard was adopted by the board and approved by the SEC late last year, and it becomes effective for audits of fiscal years ending on or after June 15th, 2025. Said differently, it became effective for audits of fiscal years beginning on or after June 15th, 2024. So this standard is already effective. We have updated the standards on our website to reflect that, and this means that these changes will be effective at the same time as the changes previously discussed for AS1000. The new standard on confirmation replaces the existing one. One reason to replace the existing standard on confirmations is that it has become outdated. The existing AS2310 was initially written by the AICPA and it took effect in 1992. The emerging technology, and for comparison, the emerging technology in 1992 was the fax machine. Most confirmations were done on paper and mailed and received on paper. Fast forward to today, the emerging technology is Gen AI, and many confirmations are actually done electronically. Second, confirmation intermediaries have entered the picture. In fact, numerous banks in the US and abroad require the use of an intermediary and will not otherwise respond to a confirmation request. Finally, there have been several recent high-profile frauds like Parmalat and Wirecard, and numerous other cases where auditors did not obtain sufficient appropriate audit evidence when using confirmation, including confirmations of cash. So now let's take a look at some of the key provisions of this new standard. So this slide shows the areas of the standard that we're going to cover real quick, or cover now. Before we do that, let's take a minute to talk about confirmation in general, so it will be easier to understand certain requirements in the new standard. What sets confirmation apart from other audit procedures is the type of evidence that it generally provides. Under the PCAOB standards, information obtained from a knowledgeable source that is independent of the company is more reliable than evidence obtained only from internal company sources. And evidence obtained directly by the auditor is more reliable than evidence obtained indirectly. Confirmation provides auditors with evidence that has both of these characteristics, that is, external and direct. And so put simply, a properly performed confirmation provides good audit evidence. Let's now connect this point with the items listed on the side. The confirming party. For confirmations to provide high-quality evidence, the auditor should maintain control over the confirmation process. A big part of maintaining control is directing the request to the appropriate confirming party. So this is the first set of requirements we're going to look at. Next, the use of negative confirmation. Not all types of confirmations provide the same level of audit evidence. We'll look at negative confirmations that do not provide as much evidence as positive confirmations as well. And lastly, cash and accounts receivable. Finally, we'll look at cash and AR and discuss how high-quality evidence should be obtained for these specific accounts. So this slide shows the requirement relating to confirming parties and examples of complying with this requirement. The requirement in new AS 2310 is similar to the existing requirement, that is sending confirmation requests to parties who the auditor believes are knowledgeable about info to be confirmed. But the new requirement is more direct. To obtain the high-quality evidence that you seek from confirmation, the auditor is required to, 1, direct confirmation requests to those who are knowledgeable about the information to be confirmed, and 2, determine that a confirmation request is properly addressed. This is the basic principle. The new standard does not prescribe specific procedures for determining that the confirmation requests are properly addressed. The auditor can tailor the procedures to the facts and circumstances of the audit. So this slide also provides some examples of these procedures. When an intermediary is not used, the auditor's procedures may involve, for example, comparing some or all addresses, which are typically provided by the company, to physical addresses or email domains included in on the confirming party's website, and that's the box on the left. When an intermediary is used, it could be a bit more complicated because another party is involved. What does the new standard say about using an intermediary? The new standard requires that the auditor evaluate the implications of using an intermediary on the reliability of the confirmation process and describes procedures the auditor should perform, including obtaining an understanding of the intermediary controls over the risk of interception and alteration and determining whether they are designed and operating effectively. This is the box on the right. So in this second example provided on the slide, where the auditor would consider whether the intermediary has controls over the names and addresses of confirming parties and whether they are designed and operate effectively. But what if they don't? The standard tells the auditor not to use the intermediary and instead send the confirmation requests themselves, or if the auditor can't, to perform alternative procedures, examples of which are described in Appendix C of the standard, depending on the area where confirmations are used. So the next we have a polling question. So true or false, the new confirmation standard prohibits the use of negative confirmation requests. True or false? Show the results. The answer is false. It does not prohibit the use of negative confirmation requests. And we'll go ahead and talk about that right now. So this is a summary of the provisions that deal with negative confirmations, which is where the auditor requests a response only if the confirming party disagrees with information provided in the request. So it tells us that negative confirmation requests provide less evidence than positive confirmation requests. And then it then tells us that under the new standard, negative confirmation requests cannot be used as a sole procedure to address a risk of material misstatement. But to be clear, they can still be used. They are not prohibited, but on their own, they will not provide sufficient appropriate audit evidence. They need to be paired up with another or other substantive procedures. So this is a change from the existing standard. And one of the reasons for this change is that people may simply ignore the negative confirmation request even more so than they did 35 years ago when the original standard was written. Think of all the spam you get on paper and electronically. Many of us send much of incoming email directly to the spam folder. I know I do. Some banks even instruct their customers not to open or respond to a request that they don't recognize. As a result, there's a high likelihood that a negative confirmation request will not be considered by the recipient. This could be either because the recipient would treat the request with suspicion, for example, as a phishing attempt, or not receive it at all if an emailed request were automatically caught in a spam filter. So the new standard does not include examples of other substantive procedures to avoid creating a checklist associated with this requirement. Determining the necessary nature, timing, and extent of audit procedures that provide sufficient appropriate audit evidence will depend on the facts and circumstances of each audit. The new standard, however, provides some examples of situations in which negative confirmation requests, together with other substantive procedures, could provide sufficient appropriate audit evidence to address a risk of material misstatement. So situations in which negative confirmation requests could be used, the examples we have here on the slide are the auditor has assessed the risk of material misstatement for the relevant assertions as low and obtained a sufficient appropriate audit evidence regarding the design and operating effectiveness of controls, the population of items within the account balance or class of transactions for which the auditor considers sending negative confirmation requests is composed of many small homogeneous items, and the auditor expects a low exception rate in response to negative confirmation requests and has a reasonable basis for this expectation.
So we have gotten a few questions in, and so before we move on to the next slide, I want to go through a couple of these. With respect to using negative confirmations and the fact that it does need to be supplemented, there is no requirement, unless we're talking about confirming cash or accounts receivable, which we will get to shortly, for actually using confirmations. So if you don't believe that the use of confirmations or negative confirmations would help to provide sufficient appropriate audit evidence, or you already know you have to do incremental procedures in addition to the use of the negative confirmations, you can choose not to incorporate them into your audit approach. So that is something that the standard doesn't require you to use them. It does provide you, though, with requirements for what you do when you do choose to use them.
We're going to talk about that one anyway.
You were going to talk about that one anyway, yes. Does the standard clarify in any way that confirmations cannot be used for testing the valuation assertion? The standard itself doesn't tell you which assertions you can or can't use confirmations for. I think that comes down to your assessed risk of material misstatement and making decisions about your audit response to those assessed risks of material misstatement. And when you saw me playing on my phone, it was because I was trying to pull up the standard so I could find the words to see if it was actually in there to help with that. Then there was other questions in here, a couple of them related to, would reviewing a SOC report be sufficient for use of an intermediary service provider for confirmations? We've talked a little bit about having to look at the reliability of the response that you get. So in considering the reliability of an intermediary providing the response, you will need to make the decision if reviewing a SOC report will help you to get to the reliability of the audit evidence. And then if you do receive a SOC report, you might be auditing that in accordance with use of service organizations, AS 2610. Those are a few of the questions that we've received. So now, before we move on to cash and accounts receivable, our next code. 733. 733. While you're taking that down, if there's questions about what's included or not included in the standards specifically, I would encourage all of you to pull up the adopting release, which you can find on the board's website and on the implementation page. The discussion in the adopting release will often answer questions about why a particular type of account or disclosure wasn't directly addressed, or why we ended up with the final requirements that we did. So I would definitely encourage you to look at that if you have questions about why certain accounts are covered and certain accounts are not covered with respect to this. So now, with that being said, we will move on to the requirements for confirming cash and accounts receivable. This slide shows what is required under the new standard. For cash and accounts receivable, the auditor is required to perform confirmation procedures or otherwise obtain relevant and reliable audit evidence by directly assessing information maintained by a knowledgeable external source. So these are the only two accounts that mandate use of confirmation within the standard for testing to obtain sufficient appropriate audit evidence. In the new standard, cash is described as cash and cash equivalents held by third parties. For example, a company's bank account. The requirement to confirm cash is new. While that's typically been done in practice, as many of you know, by auditors, there was not a specific requirement to do so in our auditing standards before. However, in some of the high-profile frauds, think Parmalat or Wirecard, low-quality cash confirmations didn't allow auditors to detect the fraud timely. The higher the risk of material misstatement, as always, the greater the evidence the auditor should obtain. And as we discussed under PCAOB standards, evidence obtained from a knowledgeable third party directly by the auditor is more reliable than information produced by the company or information obtained indirectly. This slide provides examples of procedures that would satisfy the requirements of the new standard. So in the box to the far left, the auditor sends confirmation requests directly. Here, the auditor sends a confirmation request and receives a response directly from the financial institution. The auditor could be doing this by email or by a physically mailed request. In the second box, an intermediary facilitates direct transmission of confirmation requests and responses. Here, the financial institution instructs all auditors to send confirmation requests using a confirmation intermediary. Let's assume that the auditor has evaluated the implications of using the intermediary on the reliability of the confirmation process and was satisfied with the results of their procedures. The auditor then uses this confirmation intermediary to facilitate direct electronic transmission of confirmation requests and responses. In the far right, the auditor directly accesses information maintained by a financial institution. Here, the auditor obtains read-only access to information maintained by the financial institution about the company's cash balances directly online through a secure website, using credentials furnished to the auditor by the financial institution. So not by the company, by the financial institution. The standard does not prescribe a particular way of directly accessing information maintained by a knowledgeable external source. Depending on the company you're auditing, you may determine that at least currently, confirmation is still your first choice. But the key here is that as new audit tools and techniques become available, their appropriate use is allowed by PCAOB standards. We have gotten a couple of questions, and I'll pause. One of them is, can confirmation selections be subject to sampling? It goes on to say, based on materiality. I'm going to stop with confirmation selections can be subject to sampling. Whether that is directly based on materiality will be determined on application of AS 2315 audit sampling and the requirements within our audit planning standards for sampling. So I would encourage you to review those standards to determine the appropriate methodology for sampling. What about cash on hand or petty cash? Does this require a cash count, for example? Again, this is going to be facts and circumstances specific depending on the company that you are auditing. So whether or not you should count the cash on hand will be determined based on the risk of material misstatement and your assessment of the company as a whole. We can't tell you affirmatively that you do or don't need to count the cash on hand. So there's a couple of questions on that. Several years ago, we were set up with a bank to automatically receive copies of bank statements each month, independent of the company. Do these statements meet the definition of confirmation? I can't say affirmatively or negatively that these don't meet the definition of confirmation, but you would have to evaluate the information received, the channel, and which one does it fall into in the three categories that are on the slide. Are we talking about you sending a confirmation request, an intermediary providing the information, or the auditor directly accessing that information? Consider this as you evaluate how you would use that documentation that you've received directly from the bank. With that, I'm going to move on to our next slide. Alternative procedures. So what happens if the auditor chooses to use a confirmation but cannot obtain evidence for some of the items selected for testing? For example, in the case of a non-response or incomplete responses. This slide shows you the requirement of the standard and an example of alternative procedures. Refer to Appendix C of the standard for a more complete discussion of alternative procedures. Under the standard, in the case of non-responses or incomplete responses, the auditor should perform alternative procedures. So here, our scenario. The auditor sends a confirmation. You've sent a confirmation request to a financial institution. No response to the initial request was received, nor to a second request that you made. As an alternative procedure that would satisfy the requirements of the new standard, you can obtain information about the company's cash balances by viewing information directly on a secure website of the financial institution. The auditor, that's you, might also be verifying the reliability of such information by addressing the validity of the website, security certificate, domain. In this case, the information viewed by the auditor could be accessed either by you, the auditor, using login credentials provided by the company, or by company personnel. Pause here to see if we have any other questions before we move on. Regarding direct access to information, what's the view response? So credentials should be provided directly to the auditor by the financial institution. I think that's what this is getting at. It should not be provided by the company. So the financial institution would be a third party in that scenario, providing you, the auditor, with the credentials. Okay, now before we move on.
I think the next one. So there's another question: is a SOC 1 required? SOC 1 report, statement of service organization controls 1 report required for each intermediary required for audit documentation? And I think the answer is there's not an explicit requirement. It's the requirement for the evaluating the controls at the intermediary is only for the auditor's purposes in order to use the intermediary as part of the confirmation process, whereas generally service organization controls apply when the issuer or the organization is using those as part of their internal control over financial reporting, so they're different requirements. So, I mean, is it theoretically possible to use a SOC 1 to satisfy the requirements inside of the new standard? I mean, yes, possible. So, but it's not required.
So before we move on to accounts receivable, I believe this is the last code for the session, so make sure you get it, code 177. I do know that we are the last thing between, accounts receivable is the last thing between us and lunch. I am aware. We will make sure we finish on time. Just take a moment, 177, the last code for this session. Make sure you make a note of that or get it logged into the app. And now let's talk about confirming accounts receivable. The very last item we'll cover today is related to accounts receivable. AS 2310 carried forward the existing requirement to confirm accounts receivable. Accounts receivable in this new standard includes receivables that arise from the transfer of goods or services to a customer or a financial institution's loans. So, going to ask me, well, what happens if confirming accounts receivable is not feasible? Unlike with cash, there may be many scenarios where using confirmation procedures or other ways of accessing information at a third party is not quite impossible, but it's not feasible either. Think, for example, industries with a history of low response rates, such as healthcare or utility companies, or situations where customers could be advised by a government agency, like the banking regulators, to avoid providing personal or financial information in response to an unexpected request. This is not feasible. This not feasible determination is based on the auditor's experience, such as prior year's audit experience with the company, or similar engagements where the auditor didn't receive confirmation responses and expects a similar result again. This is somewhat similar to some of the criteria in previous 2310. So if it's not feasible to obtain external information directly through confirmation, the auditor is required to obtain external information indirectly by performing other substantive procedures, including tests of details. So yes, performing tests of details in these scenarios is required. So note, this is a requirement to perform tests of details. Performing substantive analytical procedures would not be sufficient to overcome the presumption to confirm. I'm going to say that again because I know we might go back to this point. There is a requirement to perform a test of details when it is not feasible to confirm accounts receivable, and performing substantive analytical procedures would not be sufficient to overcome the presumption to confirm. So let's take a look at some examples on this slide. But first of all, what is external information and what is obtaining it indirectly? So external information is simply not information produced by the company. It's that easy. A flat file received from the company's bank is an example of external information. But an invoice issued by the company is an example of information produced by the company. Although the flat file is in the company's possession, it can be traced to the bank that produced it and sent it to the company. So receiving external information indirectly is getting something from an external source through the company. Obtaining external information indirectly is simply obtaining it not directly from the external party where it originated, but by other means, like from the company. For example, the auditor could obtain external information indirectly by examining subsequent cash receipts, shipping documents from third-party carriers, customer purchase orders, or signed contracts. The standard does not prescribe the nature, timing, or extent of these procedures. The auditor will determine those nature, timing, and extent based on specific facts and circumstances. An auditor may determine it is necessary to perform more than one such procedure to obtain sufficient appropriate evidence in lieu of performing confirmations. So you might perform one or a combination of procedures to obtain sufficient appropriate audit evidence in lieu of confirming accounts receivable. Before we move on to our next polling question, Andrew, are there any questions that we wanted to get to?
I'm just looking through now. I think I've marked all the ones that we've addressed.
Okay. So with that, we do have a polling question coming up, the last one of this presentation. True. Okay, I'm not sure what's going on there. That's the previous one. Okay, so we missed the polling question. In case anybody's interested in what it was, does the new confirmation standard require the auditor to communicate to the audit committee regarding their use of confirmation? There were three options: yes, no, and it depends. I'm sorry for those of you online, but let's just do a quick show of hands in the room. How many people would think, if you want to close your eyes so you don't have to see anybody else's response, that's okay. How many people think, yes, there is a requirement to make an audit committee communication? How many people think, no, there's no requirement for audit committee communications regarding confirmations? Okay, now the third option, how many people think it depends? Well, all of you are right. It depends. So the last thing for us to mention today during our presentation. Under existing PCAOB standards, the auditor is required to discuss with the audit committee the significant risks identified during the auditor's risk assessment procedures. So, under the new standard, for significant risks associated with cash or accounts receivable, the new standard requires the auditor to communicate to the audit committee when the auditor did not perform confirmation procedures or otherwise obtain audit evidence by directly accessing information maintained by a knowledgeable external source. So, if you were able to do confirmations, no communication to the audit committee. If you were not able to do confirmations and did not obtain audit evidence by directly accessing information from a knowledgeable external source, there is a requirement to make the communication to the audit committee. So, with that, we are going to take a look to see if there's any other questions here that we think we can address during this session. You can find Andrew and I around, and we'll be here during lunch and for the rest of the day. But otherwise, Brian or Kent, would you like to come up and share any other knowledgeable information?